Hi, this is Simon with Trade and Perform Coaching. It is August 21st, 2013, and this is the trade review for ES and NQ. And so, wanted to cover a couple of things tonight. First, of course, is that this is for educational purposes only. Nothing in this video should be construed as trading advice. So the first thing is, how do we go about making money on a daily basis, and how do we handle extreme volatility? And are you a trader that makes money every single day, or are you not a trader that makes money every single day? And the cool thing is, I speak to some traders, they don't use zones like I do. They use Fibonacci levels. And, they have certain levels that they wait for. And, the funny thing is, because those guys have built a rules package around those Fibonacci numbers, there's nothing, in my opinion, magical about Fibonacci numbers. I've heard good arguments it doesn't even work. I've heard good arguments that it does work. I don't use them myself, but at least I don't use them for ES or NQ. So, but the fact is that to trade well requires two things. First of all, you have to have an edge. Second part is you have to have a plan to exploit the edge. And the third part is you have to have a stop that'll both work for the amount of capital you have available to you, and the flip side of that is you have to have a stop that is reasonable for the trade you're taking. So given all that, and looking at what we are talking about today, let's talk about the bread and butter. What is the bread and butter trade that I make money on? The bread and butter trade is the first move into the zone after the market's open, from the top all the way to the back, with the stop being 2 to 3 points behind the back of the zone. Generally, I'm working with a 2-point stop behind the back of the zone, and I try to keep most of my trades at 3. Occasionally they go to 4 points. And then I get the 2-point rotation out each and every time, right? And I focus on the first trade. So that means the second trade and third trade that failed here, I don't have any affiliation with those trades. It's not even on my radar. I'm totally relaxed. I may even be reading something. It's just not there, and I don't have any trade decisions to make here besides whether I'm going to exit or not. I'm not trying to figure out if the market's going up from here or down from here or what it's going to do. And that puts me in a very relaxed state. It's really quite hard to be predicting moves all the time and where we're going to go, and it's a lot of tenseness, and I hate tenseness. I like things to be pretty straightforward, relaxed, and I like to know what I'm going to do when the situation arises. So this next move into the zone, I'd already made a decision that if we'd gotten down below this zone, that this was a pretty good break, and that I wanted to trade from the middle of the zone up. And I tweeted out that I was going to put a limit in the middle of the zone here, and it didn't get hit. I was sitting there at 1640, and I just didn't get filled. So I didn't get my second 2-point trade of the day. And earlier I had an NQ trade that I lost a little bit of money on. That was the first trade rule that I had broken today on the NQ trade. And so obviously everyone knows what happened after we had the Fed minutes. The market tanked. I wasn't here for this. Had I been here, I still wouldn't have gotten filled. My entry would have been sitting either here or here, and it didn't tick either one of them, so I wouldn't have gotten filled. But the other thing that I notice is, man, when the market's on fire like this, and it's ranging like this is 36 all the way up to almost 56, 20 points, right? Now, when the majority of your day is spent on 2 to 4 point rotations, and all of a sudden you've got a 20-point rotation, so things have changed at this point, okay? And you've got to be thinking, when I see this and it's not a daily occurrence, I'm thinking defense, not offense, okay? The other part is the mental setting, okay? In the morning, I'm very structured. I know exactly what I'm going to do and how I'm going to do it, and I review my trade plans before the market opens so that if I don't get my setup, I'm totally fine just ignoring what's going on. I'm not trying to figure it out. But this afternoon, I'd come back. When I didn't get filled here, I left to go work out. I had a long workout, and I took a little bit longer lunch. And I was watching it run all the way up, and I kind of figured, I've been around the markets for a while, and I kind of figured, well, we're gonna close at a range extreme today. And so when we got to pull back into here, into this zone right here in the middle, I believe I took 1650.50 long. I might be wrong. It might have been 1650 even. And it was in the last hour of the day. So I wasn't going to fade the move up. And I took the long so a couple things were going on here. First of all, I cut my trade size, and because of the volatility, I cut the trade size in half. In the afternoon, I'm generally about half the size that I am in the morning, and then I cut that in half again, and I used a 3-point stop. And I almost got my 2 points. I came within, I think, a tick of getting hit on my 2 points, and it didn't fill. Now, normally when I'm trading, I would have moved my stop to break even at that point, or I would have taken half, or I would have done something to help myself out, but I was kind of complacent. First of all, I was very relaxed. I was very amused by the size of the move, and I was probably a little excited thinking, you know, if I can get this here and we can close up and make a move into this zone, the 1660, 1662 area, you know, I'll have a pretty nice trade in my hand. I can make some money here. And so I let several things happen where I ended up getting stopped. The other thing that I missed is that not only was I thinking up here, but I'd also become quite relaxed because I had forgotten that not only did I not get hit on my long here, but that I actually gotten stopped on NQ. So this was actually my second stop of the day. I violated the rule now. My rule is, even if I'm still profitable, which I was at this point, was 2 stops back to back and I'm done for the day. So the one thing I did do right is I didn't jump right back in. I didn't try to make up the loss. I just kind of ho-hummed it. But as we're getting to the close of the day, I'm realizing that we are going to close at a range extreme. When I get here, I said we're probably going to come down and close it to low of the day, since I assume we're going to close it to low of the day here. And I don't have a reason for it or any science behind it. I've been watching the market for a long time, and when we make these extreme moves, we tend to close at the very extreme end of that extreme move. And so I took probably what was my worst position trade in a long time, and I shorted right here at 1642.5. And my plan was just to let it go all the way into the 415 close, and maybe a little bit further, which is exactly what I did. And I ended up covering from 1642, I think I covered this in 42.5 to 1632.5, which is a 10-point move, and I covered 3/4 of the trade. I still have a short on here, and my objective was to get down to this 1628 area. It's an area of strong, there's an open gap and strong support here at 1627.50, so I figure 1628.50 is right in front of that. I should be able to get a cover. My guess is that we could tag this overnight, but who the heck wants to stay up all night? So I'll probably just put a stop in here at the top of this swing here on this last quarter, which probably means I'll just put it in at 1639, the stop, and let the rest of the trade play out. So the other thing that I wanted to discuss is trade management and capital management. So this kind of movement can really cause some serious damage to traders. This is where one-day trade meltdowns really kill you, right? And one of the things I say is, first of all, I'm not a big fan of trading in the last hour, despite my actions today. Normally, you'll see, if you look at my blog, my blotter, excuse me, if you look at the blotter at the end of the day, you'd see that out of 100 days, there's maybe trade activity in 4 of them, maybe 5. There's not a lot of trade activity in the last hour. And of the activity you'll see, you'll probably see that it's either break even or losing majority-wise, but you'll probably see the numbers play out pretty nicely. And it has to be a really good setup. So, you know, if you start taking 2-point stops and this kind of stuff, and you enter, you can find yourself down 8 points really fast or more. And you add in commissions with that, and all of a sudden you add in the commissions, and you could be down 10 points, 11 points, 12 points. It can really be a very damaging day. And so one thing that I always encourage traders is find your trade that you're going to exploit, your bread and butter, and know every trade that you're going to take. Know your trade. Like in this particular sense here, this trade actually worked successfully. I took it in the right place. It was a good setup. The only thing I did wrong was I took it going into the last hour. That's all there was to it. I took it past 1400. But other than that, this was a reasonable setup. We came from the zone above. This was the first test in. I was fine there. The trade that I took that was incorrect was this trade right here. We were near right here. We were not near the low of the day. We hadn't broken the low, although this was the about to pierce the lowest close for the day. And I was pretty much betting that I was absolutely right. It was really a poorly placed trade. I was rewarded for it. I read it right based on the price action. But if the danger for me at this point with this trade is that I go into tomorrow and I think I have this whole thing figured out, and I go and I go, well, I have money to work against because I took a 10-point trade at the end of the day, and that could really, really mess me up psychologically. So tonight I've spent a lot of time working and reinforcing that I will only trade my zones tomorrow, that I will only trade my exact setups. If I see a swing trade possibly setting up, I may take that, okay? But I'm not certain that we can't get back to 1650 tomorrow. I'm not certain of that. Certainly would seem plausible to get a retrace up to here. And I'm not certain that we can't get all the way down into this 1620 or even 1615 level. I'm not sure of that either. So, and I don't have to know. So the other part that you might have seen me tweet out is you don't have to know what's going to happen next in order to make money. Like, let's say this trade had come down and we were able to get a log off of 1636. All you have to know is where you're going to put your entry in and where you're going to put your stop and how much you can take for a day if you're wrong, right? The other point that I wanted to bring up here is that generally on non-news days, once we get to initial support, I want to stop taking the contra trade at that point, meaning if we come down to initial support, I now want to look long or maybe just keep my hands in my pocket, one of the two. But I don't want to keep trying to short near initial support because these are the kind of moves that occur once that happen. And I kind of figured we would get a push into initial resistance and then we would push back down. I figured we would head fake down, but as it is, we're still one-timing this market, meaning we cannot set a high above the previous day's high yet, and that 1656, 1654 is becoming formidable resistance and a place to keep your eye on the next time we get back up there. So I'm extremely tired. I think the keys that I want to leave you with is that it's possible that we have a wider range tomorrow, but the volatility should go back to our normal August levels of volatility. There's really no shocking news here. When the market volatility does expand, you have to decide whether your account is big enough for you to play and whether you have enough emotional and control, enough discipline to withdraw from the market once it starts going against you. And the way to do that is to avoid this altogether. And how do you do that? Focus on the first 2 hours of the day. All you need to do is get 1 or 2 good trades every day to build your account. I've been helping people do this for a long time, and I assure you that you can build a trade. You can build your trading account with just 1 to 2 point trade a day or 2 1 to 2 point trades a day. So I'm very tired, so I'm going to wrap this up early. I hope this was helpful. Please do your homework, do your journaling. It's not enough just to do your charting. You have to do your emotional journaling. You have to catch the areas where you're making mistakes and catch them early and figure out the reason why you're making those mistakes. Don't let that, as FT71 refers to it as, don't let the monkey take control of you, because he's just waiting there to jack your day up. And we work too hard to make money. This is one stressful, hard business if you don't get down into regiments. And the success in this business is all about regiments, and then recognizing once you get good at your bread and butter, once you get good at the fundamentals, recognizing when there's an exceptional opportunity, as I did at the end of the day, and I saw that we were probably going to get this continuation of a sell-off after the market. So my name is Simon. I'm with Trade and Perform Coaching. If you would like to learn to become a master trader, if you'd like to pick consistent profits in your trading account, please don't hesitate to contact me. You can reach me at tradeandperform@gmail.com or hit me on Twitter or StockTwits. Have a great night, everyone. We'll do this all again tomorrow morning.